Brian, there have been people in the past who have tried to time the stock market. How has this worked out for them over time?
Yeah, there isn't any strategy that I know of that says that there's some way to time the market. If there was, you'd be the richest person in the world, really. I mean, I know that there's a lot of classes out there that'll tell you how to do all this stuff, and it works until it doesn't. And then you have a market that you weren't expecting, and it doesn't. I remember one fellow I was talking to, he built a portfolio up to $1 million managing his mom's money. He went to all these classes and did everything they said, and the problem was he started with $3 million. And so he was down to $1 million. He said, maybe I shouldn't be doing this anymore because I don't know what I'm doing. I said, well, that's probably good advice. But yeah, timing the market is really difficult. I mean, I think long term you can say, all right, I believe markets will go up. And or I think certain sectors are better than other sectors. That is a version of timing the market. But, we don't know what the market's going to do a week from Tuesday. So how can we know what it's going to do tomorrow or in a week? Markets are where they are because 50% of the people think they're too high and 50% too low. Otherwise, you would buy or sell. And so they're at equilibrium all the time. So it's virtually impossible to time the stock market.
Brian, what are some of the indicators that you may use to make your investment choices insofar as how the market is doing?
Yeah, so I mentioned it's impossible to time it, in my opinion, in the short term or know what it's going to do in a particular day, week, month, or whatever. But also there are indicators that might say that you might think, well, make something a good buy. It could be valuations relative, price-earnings ratios relative to where they are historically. There is times to buy low, and certainly you might look at demand patterns and say, well, gosh, everything, including my toaster, has a semiconductor. Maybe I should invest in semiconductors. There are things that we can use our brains to say, we think the future is going to be strong for this particular sector or area of the market long term. So that, again, that is a form of timing. You're saying that you believe you know something about particular parts, whether it's of individual stock or sectors of the market, that will outperform the averages over time. So that's a method of timing, but I think more to the point for this segment, I just want to point out, because a lot of people think that, gee, I can just pick and choose I know better than the market as to what's going to go up and what isn't, and day by day. I think that's virtually impossible to do consistently over time.
Brian, for those people who are making their own investment choices, is there a general guideline, a rule of thumb that you may want to use in picking those investment choices?
Well, often, what's interesting, I think a lot of people buy what they know. And if they know a particular company or sector they think is going to do really well because they have a good sense for that, that tends to work out pretty good for them very often. So I guess one answer would be kind of buy what you know, buy what you believe in, and often that's the best course of action.
Are there certain trends that you should follow? For example, if 3D printers are all the rage, I mean, how soon should you jump onto something like that?
Well, that's a good question, because a lot of people say, well, I know a particular area is going to do well. And I'll say, yeah, but in everything, there's usually two companies that are the eventual winners. It's Microsoft and Apple. It's Home Depot and Lowe's, or there's always a couple that survive and the rest of them go away. So you may have the right sector but the wrong companies. And think back to the dot-com era. Dot-coms, the internet and so forth was great. Just the companies that were in it weren't so good. I mean, the ones that succeeded that didn't even exist. You couldn't buy Google back then, or some of these other companies, Facebook or anything like that. You bought companies that don't even exist anymore. So that is difficult sometimes. Even if you have the right sector, you better have the right company within the right sector. And I could say the same thing for cryptocurrency. They're not all going to be there in 20 years, so you got to pick the right one. And I don't know which one that is. So if you feel like you have that information, great. Otherwise, that's why a lot of people turn to indexing, because we just don't know. We're going to buy all of it, and so indexing is the answer for a lot of people.
Brian, thanks for telling us about timing the market.